Hey everyone, this is SEA Crypto Daily Buzz. Today is Monday, March 16th, 2026, and this channel brings you the most important crypto news for investors across Southeast Asia. We've got 6 major stories lined up for you today, so let's get right into it. Bitcoin took a significant hit over the weekend after hawkish comments from the Bank of Japan rattled global markets. The BOJ signaled a firmer stance on monetary tightening, which immediately pressured risk assets across the board. Bitcoin dropped below $70,000 following the CME futures open, with the broader CoinDesk 20 index falling roughly 6% in a single session. Digital asset treasury stocks were hit even harder. Strategy fell to its lowest level since October 2024, and firms like BitMine, Upexi, and SharpLink tumbled nearly 10%. My take on this: every BOJ rate hike cycle since 2024 has triggered a 20 to 30% Bitcoin drawdown. The mechanism is straightforward. Tighter Japanese monetary policy unwinds the yen carry trade, which drains global liquidity that has been supporting risk assets, including crypto. For investors across Southeast Asia, particularly in markets like the Philippines and Indonesia, where capital flows are sensitive to global liquidity shifts, this is a signal to watch your risk exposure carefully. The key variable now is this week's Federal Reserve meeting on March 17th and 18th. If the Fed also leans hawkish, the combination could push Bitcoin significantly lower. Stay defensive, manage your leverage, and do not assume the bottom is in until we get clarity from both central banks. Despite the price weakness, there is a notable bright spot on the institutional side. U.S. spot Bitcoin ETFs just recorded their first 5-day inflow streak of 2026, pulling in a combined $767 million over the week. The strongest single day was Tuesday with $251 million, and BlackRock's IBIT alone captured 80% of the most recent daily inflow. Spot Ether ETFs also joined the party, recording 4 consecutive days of positive flows, totaling $212 million, with BlackRock again leading the way. My read on this: after 6 straight weeks of outflows that drained roughly $4.5 billion, this reversal is structurally significant. The fact that BlackRock is capturing the lion's share tells you this is institutional money flowing back in, not retail speculation. For Southeast Asian investors, this creates an interesting divergence. Prices are under pressure from macro headwinds, but the smart money is quietly accumulating. Historically, these kinds of flow versus price disconnects tend to resolve in favor of the capital flows, meaning the current dip could be building a stronger price floor than it appears on the surface. Japan is preparing one of the most investor-friendly crypto tax reforms in any major economy. Under the government's 2026 tax reform blueprint, profits from qualifying crypto assets will be taxed at a flat 20% rate, down from the current maximum of 55%. This brings crypto taxation in line with stocks and investment trusts, and the reform also introduces a 3-year loss carryover deduction system starting this year. Japan has also launched its first XRP exchange-traded fund and plans to roll out additional crypto ETFs under the new framework. My assessment: this is a massive policy shift that positions Japan as one of the most competitive crypto markets in Asia. A 55% tax rate was effectively a punishment for trading. Cutting it to 20% changes the incentive structure entirely. For the broader Southeast Asian region, this sets a benchmark that regulators in Singapore, the Philippines, and Indonesia will be watching closely. If Japan's reform attracts significant capital inflows, expect pressure on other Asian governments to follow with similar competitive tax treatment. We still have 3 more important stories to cover. Let's continue. All right, let's move on to the next 3 stories. European authorities have dismantled one of the largest Bitcoin mixing services ever operated. Europol, working with German and Swiss police, seized CryptoMixer, a platform that processed over 1.3 billion euros in Bitcoin since 2016. The operation resulted in the seizure of 3 servers, the CryptoMixer.io domain, more than 25 million euros worth of Bitcoin, and over 12 terabytes of data. Investigators say the platform was heavily used by ransomware groups, dark web marketplaces, and cross-border money laundering operations. My take on this: while most legitimate investors never touch mixing services, this takedown matters for the broader market. Every major enforcement action like this chips away at the narrative that crypto is primarily used for crime, which remains one of the biggest barriers to mainstream adoption in Southeast Asia. More importantly, The 12 terabytes of seized data will likely generate new investigations and potentially affect users who interacted with the platform, even indirectly through exchanges. If you are using any platform that had connections to mixing services, this is a wake-up call to ensure your transaction history is clean and traceable. Goldman Sachs has been quietly building one of the largest institutional positions in XRP exchange-traded funds. Recent regulatory filings show the bank holds approximately $154 million across 4 spot XRP ETF products, making it the single largest disclosed institutional holder. Total XRP ETF assets now sit at roughly $1.2 billion, with cumulative inflows exceeding $1 billion throughout 2025. However, most of the capital in these funds comes from entities that are not required to file disclosures, likely family offices, smaller advisory firms, and retail brokerage accounts. My honest assessment: Goldman's involvement is a significant validation signal for XRP as an institutional asset class. But context matters. Despite the ETF inflows, XRP's price has struggled to maintain upward momentum because institutional ETF buying does not always translate directly into spot market demand. For Southeast Asian investors, especially those watching XRP for its cross-border payment potential in markets like the Philippines and Singapore, the Goldman filing confirms that serious capital is positioning, but patience is required for the price to reflect it. The Ethereum Foundation has sold 5,000 ETH to publicly traded firm BitMine Immersion Technologies in an over-the-counter deal worth approximately $10.2 million. The transaction was priced at an average of $2,043 per coin. And BitMine, chaired by well-known investor Tom Lee, now holds roughly 4.5 million ETH along with 195 Bitcoin and $1.2 billion in cash reserves. The foundation stated the proceeds will fund protocol research, ecosystem development, and community grants. My personal read: this is actually a positive signal from both sides. The Ethereum Foundation is not dumping on the open market. It is executing controlled OTC sales to fund long-term development, which shows treasury discipline. And the fact that Tom Lee's firm is the buyer, actively accumulating Ether ahead of the upcoming Fusaka upgrade, suggests institutional conviction that Ethereum's fundamentals are improving. For investors across Southeast Asia who hold Ethereum positions, this kind of OTC flow between foundations and institutional buyers is exactly the type of accumulation pattern that typically precedes price recoveries. Before we wrap up, here's a quick recap of today's 6 stories. Story 1. Bitcoin drops sharply below $70,000 after hawkish Bank of Japan comments rattle global markets. Story 2. U.S. spot Bitcoin and Ether ETFs log their first 5-day inflow streak of 2026, led by BlackRock. Story 3. Japan prepares to slash crypto tax from 55% to a flat 20% under its 2026 reform plan. Story 4. Europol dismantles CryptoMixer, seizing 1.3 billion euros worth of laundered Bitcoin data and infrastructure. Story 5. Goldman Sachs revealed as the top institutional holder of XRP ETFs with $154 million in positions. Story 6. Ethereum Foundation sells 5,000 ETH to Tom Lee's BitMine for $10.2 million in an OTC deal. This video is for information and education only and is not financial advice. All investment decisions and risks are your own responsibility. If this video was helpful, please subscribe, hit the like button, and turn on the notification bell. For real-time alerts and trading signals, join our Telegram channel, link in the description. See you in the next one.